All right, guys, the three economic events that are happening this week could be the most important drivers of the stock market of all of 2023. Two of them are happening tomorrow, and the big one is happening on Friday. Investors, pay attention. Let's take a quick look. The first one, tomorrow, consumer credit report is released for the month of February. How much debt are we adding to our balance sheets as Americans? In January, we added $11.6 billion in debt, which sounds like a massive number. Tomorrow, the expectation is for it to come in 2 times more than that in the month of February. U.S. adding $25 billion in debt to our balance sheets. You have to realize the average American right now is drowning in debt. They have $5,000 of credit card debt at an obnoxious rate of 25% interest. Yikes. Are we able to continue to add this amount of debt to our balance sheets as consumers? If we're not, that's not a good thing for the consumer and the economy moving forward. The second event is also tomorrow. Fed Chairman Jerome Powell has to testify in front of the Senate. This is his first public appearance since back on February 7th. And on February 7th, we had not yet seen the January economic data that all stated inflation is higher and stickier than what we had previously expected. So tomorrow, Jerome Powell may have to take this opportunity to talk very aggressively or hawkishly about raising rates aggressively to curb that inflationary surge. If that happens, the stock market likely will not take that well. And the third one is on Friday. This could be the big one. This is the employment report for the month of February. If you remember back in January, we added 517,000 jobs, which was massively above expectation. And the market actually sold off. We added too many jobs, if you can believe that. The market took this as inflation's going to continue to be out of control because too many people are employed. So the expectation for the report on Friday is that we add in the month of February 204,000 jobs to the U.S. economy. And you as an investor want the number to come in right about at that mark. Because if it comes in too low, the market's going to say, hey, this is us entering into a recession, unemployment's going to pick up. But if the number comes in too high, like it did in January, inflation's out of control. Watch out, the Fed's going to have to be super aggressive. So again, we want it to come in right about at expectations of 204,000. If it comes in one way or the other, you could see a big movement in the stock market. Pay attention, guys. This is a huge week. I'm not overstating it. Diversify and stay safe.